So, chemicals also now include three categories, uh, like the bromine derivatives, the advanced intermediates, CSM, as well as Bulai chemicals. So the Bulai organolithium compounds. So all four were there. So we were very happy that, as we saw in Q3, we had a bit of a challenge because of, the price fluctuation in lithium metal and having lower demand on the Bulai chemicals. So we recovered from that. The organolithium itself contributed to almost 17-18 crores of our revenue, even with a lower lithium price. Again, this was still not yet fully utilization. So I would say at a utilization level, roughly we are at around, in the organic space, we are at around 60-65%. In the lithium space, we are almost at around 75 to 80%, which is very close to the peak utilization levels that we have. Of course, as you saw that the revenues were lower, but if you look on the volume basis, we were like about 4-5% better in this quarter as compared to last quarter. Previous year, same quarter, just because of the price differential is why you saw the 66 crore become 35 crore, around 35 crore kind of a number. So I think inorganic chemicals is close to full utilization levels. Organic chemical is at around 60-65% kind of utilization levels overall. And battery.
Ladies and gentlemen, please stay connected. Participants, please stay connected while we rejoin the management back to the call.
Yeah.
Ladies and gentlemen, thank you for the patience. We have the management line reconnected. Sir, go ahead.
Hi, sorry. I was able to hear you guys, so I don't know where I got dropped off. I think the question was on utilization levels. I think I gave a long answer, but our inorganic chemical is almost close to 75-80% utilization levels. At organic chemicals, we are at around 60-65% kind of utilization levels, and we still have room to grow further there. And again, battery materials, we are just starting.
Great. Just if you could help me with volume growth for this quarter and full year. I think for this quarter, you mentioned 4-5% volume growth for the full year.
Yeah. No, for the inorganic chemical, it was 4-5%. I think full year was also close to 4-5%. Again, for us, it's very difficult to do metric ton to metric ton level because of the product mix. But the way we looked at it, that if the same prices which were there today were given in our last year or last quarter, what is the revenue which would have been different? So, or similarly, vice versa when we do that. So we see a volume growth of around 4-5% in the inorganic side. And on the organic side, we are seeing almost 20% for the full year.
Sorry, sir, you were inaudible. For the full year, it was 20?
25 to on the organic side, volume.
Sir, sorry, we are again losing your audio, sir.
Okay, let me reconnect. Sorry.
Participants, please stay connected while we rejoin the management back to the call. Ladies and gentlemen, thank you once again for your patience. We have the line for the management reconnected. So please go ahead.
Yeah. I think the last question was about volume growth. So what we mentioned that for the organic production, it was around 25 to 30%, and for inorganic, it was around 5 to 10% volume growth.
Great, sir. And if you can help me, we have set a target of reaching 40% revenue contribution from CSM business. So where do we currently stand? And so as last quarter you had mentioned, we are somewhere around 30%. We are still on 30%. So when do we see reaching 40% contribution?
I think 40% contribution is our CSM and advanced intermediate together. So advanced and CSM together is going to be 40. What we said 40% is going to be bromine derivatives and 20% is going to be inorganic lithium salts on a stable lithium price. So there also the breakup right now stands 50% and 30%, out of which 15% was CSM and 15% was advanced intermediate. And I think the idea is to have 20%. So I think this is an area where we expect that the future growth as we reach 1,000 crore by FY26, you will see more contribution coming from advanced intermediates and CSM business. So by FY26, we would be at 40% from bromine derivatives, 20% CSM, 20% advanced intermediate, and 20% battery materials. Inorganic lithium salts, non-battery within Neogen. So that's the breakup which we are targeting.
Okay, great. And sir, in last quarter, you had mentioned we are facing some challenges in the agro and pharma side. So what is the current situation and like, is the current situation improved? And if not, then when do we see it improving?
So on the pharma side, my view remains same that the specialty pharma, which are not very bulk like statins or like your sartans or antiretroviral. So those kind of pharma, we have seen normalization and some of them are even now growing very well. So fortunately, we were part of some of these value chain. So if you might also recall or we had signed a long-term agreement with one innovator customer for supplying intermediates to their AP. So that business is also doing very well and growing very fast. That is taking care of some of the business which we are losing out or lower demand from our traditional bulk pharma kind of customers. Agro, we have still not seen. We've seen some increase in April in the bulk pharma. So we started seeing maybe after March the inventory correction have happened, and we've seen a little bit of uptick in even the bulk pharma. So sartans kind of a revenue also has started increasing. So it's too early to call out whether it's just for inventory, they are building up inventory after controlling it in March, or whether it's going to be long term. So we'll take a view of that. Then agro side, we have still not seen, again, the interest for non-China remains very strong. As I said, we started working with 2 or 3 more customers in last, let's say, 3 to 6 months who want to have an alternate to China. So that interest remains high, but we've not seen really volumes come up. Most of them are saying that 2025 is when they'll have their demands, half of 2024. So maybe towards September, October, they might start releasing POs for their 25 requirement. So agro, we are still expecting in the second half to start contributing.
Okay, great. So just last one, if you can let me know what would be the current bromine and lithium prices?
We can't give you. Lithium prices touched their lowest and they have just started increasing again, but still below what I call is a long-term sustainable price of lithium. So I don't know how the industry develops, but my expectation is over, let's say, next 2 years, you will see an increase in lithium price, and depending on how fast demand growth comes, you might again see crazy lithium prices in 26 or 27. So that's on the lithium, and bromine also have reached its bottom price and have started increasing slightly or at least stabilizing. We've not seen further decrease on either bromine or lithium in the last one.
Great, sir. Thank you so much. That was helpful. I'll join back in with you.
Thank you.
Thank you. Next question is from the line of Archit Joshi from B&K Securities. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. So my first question on the expectation of doing somewhere close to 300 crores of revenues through battery materials in F26. So obviously some rough calculations. If I look at it from the realization range that you gave, would it be fair to assume that we would be able to service around 2.5 to 3 gigawatt hours of battery capacity in India basis the 300 crore revenue that we are expecting?
Yeah. So Archit, the electrolyte 2000 metric ton can already can take care of like 2 to 4 gigawatt hour, depending on whether it is LFP chemistry or NMC chemistry. NMC, it can support up to 4 giga. If it's LFP, like more closer to around 2 giga is what on the electrolyte side. So that is something which can happen. And on the electrolyte salt side, we have basically 5,500 metric ton, which will be fully available, let's say, for FY26. So that can support, let's say, around 30 gigawatt of final electrolyte production, and then batteries made out of that. So on electrolyte salt, let's say for FY26, we'll have a 30 gigawatt hour capacity available, and on the electrolyte, it will be around 2 to 4 gigawatt hour capacity. So roughly, let's say you can say 80-90% of the salt. Of course, this is just beginning of FY26, and then in FY26, in the second half, our Pakhajan site also will come online. So then overall electrolyte capacity available for or FY26 will be even higher, because once that comes in the second half, I can support 30 gigawatt hour more. So if we go to the second half of FY26, we'll have a capacity to serve up to 30 gigawatt hour on electrolyte side and up to 30-35 gigawatt hour on the electrolyte salt side.
Sure. Got it. So lastly, small bits on our expected books. So we have recently the board meeting approved a 500 crore infusion through CCDs. Is that expected in FY25 immediately? And what will that entail into an incremental debt? Is there any other debt than the CCDs that we are infusing in Neogen Ionics? And if you can kind of give us the peak debt that we might go to in FY26 also.
Sure. So, in terms of CCDs, this is basically on request basically from our bankers. So we are very fortunate that our existing bankers have extended us like a 10-year, 12-year term loan, especially for our Pakhajan site, where majority of the capex we are doing. We have received like a 12-year term loan with moratorium for 2 years on interest, then 1 year on principal, and then a gradual repayment over 9 years. So these were very strong preferential terms that we got. And the equity portion, the bank requested that it could be of course, the bank would have requested directly as a equity, but we didn't want to put everything at par equity. So the CCD was a way for us to basically put of equity, or let's say quasi equity, into the Ionics. Again, this is an enabling resolution up to 500 crores. We will be doing it gradually over 3 years of time. And even our existing investment, which is either in terms of transfer of some assets or in terms of transfer like intercorporate deposits. So even now, so far, we already invested around 220 odd crores. So out of that 500 crore, 220 crores would be, the investment which we've already done, which will be converted basically into the CCD form. Shareholder approvals and all the formalities are completed. So that's basically the reason behind that.
So at a peak debt number, let's say in FY26, what might be?
So FY26, out of that 1,500 crore capex, around 1,100 crores would be, so Ketan has number 1,150 crores would be the debt which will come from outside. Again, this debt not only includes the direct capex, but under the terms, they are also funding GST, which we can't use, the initial working capital, the interest for the 2 years. So everything together, 1,500 crores, of which around 1,150 crores will be funded by our bankers. And this will be all at Neogen Ionics level. So it will not be on Neogen. At Neogen level, we feel whatever is our current debt will remain stable. As we maybe infuse a little bit more, depending on how much we generate versus how much we infuse, there might be a slight increase in working capital utilization, which today, we have a working capital limits which can support up to 400 crores, but we are using it under. So maybe some of that might get eventually used as we put our own money and do infusion into, let's say, Neogen Ionics. So I would say 1,150 there, and maybe what we have another 350 years, so maybe another 100 odd crore more, so at 450. somewhere around 1,500 odd crores over next 3 years.
Got it, sir. So one last question. I think our net block has increased by around 140 crores, and we have close to 110 crores in our
Archit, sorry to interrupt you. We are losing your audio. Can you come in a better reception area, please?
Sure. Am I audible now? Is this better?
Little bit. Yeah.
Yes, you're audible to me. Yeah.
Sure. Sir, I was speaking of our net block, which has been increased by around 140 crores, and we have another CWIP of close to 110 crores. And our CapEx numbers, as you mentioned previously, is that we are expecting to, with the 30,000 plant that we are expecting to commission and capitalize by FY26, the balance seems to be around 1,200-1,300 crores of incremental CapEx infusion. So, sir, if you can give a split as to what might be the CapEx we are expecting in F25 and what would be the balance left in F26. That would be my last question, sir. Thank you.
I think we are expecting another 400 to 500 crores in FY25, and the balance will be coming in FY26.
Sir, thanks a lot. All the best.
Thank you. A request to all the participants, please restrict to 2 questions per participant and kindly join the queue again for a follow-up question. The next question is from the line of Bhargav from Ambit Asset Management. Please go ahead.
Yeah, good afternoon, sir, and thank you.
Bhargav, sorry, can you please speak to the handset?
Yeah, is it better?
No, sir, voice is still coming muffled. Can you please use the handset?
Yeah, I'm using the handset. Sir, can you hear me?
It's better now.
Yes, we can hear you. Yes.
Sir, my first question is that on the revenue size of about 700 crores, clearly the capex of 1,500 crores is a sizable sum. So have we sort of decided that we'll go ahead with this entire capex, or we'll have some milestones which we will monitor and take a slightly risk-adjusted approach for this capex?
No, so you are absolutely right, and that's something which, I would have also been happier if I had to do this capex over 3 years, 4 years time instead of, let's say, 2 years time. But it's just that the situation demands this way. But we are watchful. So as I mentioned, our first facility from where we can supply electrolyte, we can supply electrolytes. We are sending this approval. So let's say in next 3 to 6 months, we'll start having approvals. And for the electrolyte business also in next 3 to 6 months, as I said, end of Q2 and early Q3, some of the Indian customers are also starting their electrolyte facilities. So we will keep watching both how the international electrolyte salt approval is progressing, as well as how India electrolyte demand is developing. In India, mostly we feel it's the demand issue, depending on how well the Indian battery industry starts manufacturing cell, and accordingly required, we can slow down and we can moderate our capex accordingly. So we'll be watching it very carefully. Please be rest assured, because again, and there will be milestones there where, let's say, for example, we can delay some of the equipment deliveries or do some of the investment in the electrolyte module, depending on whether if there's a slowdown in electrolyte salt or electrolyte. So we'll keep watching that.
Secondly, sir, this ITA Act in the US is likely to be passed in 2025. But in the event that there is a delay in passing of this act, then how does it impact our exports revenue that we are targeting? Is there a plan B in place?
So one is, when you say IT means IRA Act, so IRA Act is already in place. So that has already been passed and that is already implemented. So this is one clarification I wanted to make. The second thing is, so the plan B is, so the capacity which, I was just answering Archit's question earlier where I said the capacity for the electrolyte salt is like 35 gigawatt hour and the electrolyte capacity is 30 gigawatt hour. So if we feel that anything which is happening in the US market which is adverse, so in such a case, for example, we can go slow on the 3,000 metric ton electrolyte salt facility which we are going to do in our Pakhajan site, and then we can build it gradually if we are not looking at the international market and if we are looking only at the India market. So therefore, the plan B is India electrolyte market, where we feel we have the maximum rights to win, being one of the first mover, having Mitsubishi's technology, and already having relationship and already having supplied electrolyte for the trial productions of the customers for last 15-16 months.
And is there any government support expected to protect the domestic manufacturers in the event there is any dumping from the foreigners as far as electrolyte or salt is concerned?
So there are two levels of protection. One is the people who have bidded for the PLI scheme, and today that is basically Ola and Reliance, and who are already selected and who are active. There is also a separate follow-on PLI which has just been concluded. I mean, the application, those are concluded. So these companies have to meet certain value addition criteria if they want a government subsidy, which is very sizable. So that to meet that value addition, the electrolyte salts, electrolyte have to be all produced locally. So, they are incentivized that if there's a small difference, please buy from India. Otherwise, you lose out on subsidy, which is almost 30% of the cost of 25 to 30% of the cost of the cell production. So this is one incentive for the companies which are having PLI. Then historically in our interactions with government policymakers, they said that once they see any component being made in India, they are ready to increase, custom duties and have protective custom duties to support the local industry. So currently, for example, cell manufacturing on cells, there is very low custom duty. But once...
Sir, we are again losing
Hello?
your audio. Sir, let me reconnect you.
No, I am able to hear them.
Yeah.
I am able to hear you, sir. Yeah.
Yeah. Okay. So, the cell manufacturing, so as cell manufacturing will come online, the policymakers have said they will put custom duties on that. And similarly, as component manufacturing will start, then they have promised custom duties. Internationally, such duties are in the range of 15% to 25%, US being highest. So on top of the IRA, they have also put 25% duties on imports of the electrolyte and other components from China. So similar protection we are also expecting in India once the manufacturing here is stabilized and the manufacturing of cell production will also start.
And sir, lastly, if we succeed on utilizing the salt capacity, but we struggle on the electrolyte capacity, then what could be the difference in terms of return on capital employed that we can expect only from the salt utilization vis-a-vis the electrolyte utilization?
So, I'm just guessing that if the electrolyte utilization, saying electrolyte utilization struggle, meaning India not manufacturing enough cells is your concern. Am I, is that correct? Yeah. Okay. So, in the case where India is not able to make enough cells and therefore there is less local electrolyte demand, there are two options. One option remains that there's some cell manufacturing starting in other geographies also where there is no electrolyte producer or no electrolyte producer is going there very fast. Explore one international market with the permission of Mitsubishi. As long as we are not conflicting with them, we have that option also available with us. The second option, worst case scenario, even that doesn't happen, and if we have no electrolyte business coming. So if we see that happening, first of all, we would also graduate the investment which we are doing. So we would not do the entire 1,500 crore. So some of the paraphernalia like, our ISO tank filling capacity, drum filling capacity, our storage tanks. So the capex of that can be modulated and we don't have to do everything upfront if the demand doesn't come. So with that, and even if after we have done and then we have a surprise or something like that, we would have at least 14 for 15% ROC in the battery business. If just the salt happens and electrolyte is happening, at a partial level. Although the way my customers are making progress, for me, it's a little bit difficult to believe that India will not be able to make 30 gigawatt hour of cells by 28 is what we are targeting.
Great, sir. Thank you very much for your answers and all the very best.
Thank you so much, sir.
Thank you very much. Participants, please stay connected while we join the management back to the call. Ladies and gentlemen, thank you for your patience. We have the line for the management reconnected. Before we proceed to the next participant, please note and kindly restrict to 2 questions per participant and join the queue again for a follow-up question. The next question is from the line of Jason from IDBI Capital. Please go ahead.
Yeah, thank you so much, sir, for taking my question. So my first question was just relating to your base business has been soft. Q3 also is pretty weak. Now you have mentioned that pharma and agro, we are seeing some green shoots there. Now I just wanted to know in terms of the Bulichem acquisition and the lithium chemistry which you added to our skill set, does that help us give a strong boost to this business? So, should we see strong boost to the base business from this acquisition?
Yeah, thank you so much for your question. And again, apologize to everyone because of the reconnection. You all had to wait. To answer your question, for me, I'm really excited with the Bulichem acquisition that we did and what it can help us in our base business. There are 3 aspects of this, as I've mentioned earlier. One is this base, it will support us, our advanced intermediate and CSM, because we have a very unique combination. Somebody who can make organolithium compounds, somebody who can combine it with bromine derivatives. And when we make and do the combination, we have lithium which comes out as a byproduct, which we can again recycle back to our non-battery lithium business. So that's a combination which very unique in the world, and wherever we want to innovate our customers, they simply love this idea, especially when they know lithium price is going to fluctuating. So at that time with the recycling, because we can reduce that, they really like that part. Also, how it is helping us that, there are many customers, there are very few suppliers of N-butyl lithium, as a whole. Again, this is a business which is normally done locally, and there are only 2 or 3 companies in the world which are basically lithium mining companies who also were doing organolithium business. So this is the first time, we are one of the significant companies who basically has a proven plant with 17 years of track record, who can basically manufacture these organolithium compounds. So that has allowed us to also enter many pharma, specialty material customers, even semiconductor customers. So it increased Neogen's visibility also to a larger group of companies in the international market. So I feel over the next 3 to 5 years, this will play a very big role, just selling N-butyl lithium and the organolithium compounds, as well as doing the combination. So I think both opportunities are very exciting for Neogen.
Sure. Thanks for that, sir. And sir, in terms of battery chemicals, the margins which we're expecting should be in line with our existing 16-17%, or do you see scope for more upside on those levels?
For the battery materials, what we feel is, it's basically going to be ROC-driven business. So therefore, a bit right now, if I think of a stable lithium price, at that stable lithium price, we expect that, yes, around 16% kind of margins basically works out based on the ROCs. But again, incrementally also, when we will go beyond this capacity, it's something which is going to be driven by ROC. Where we can really get better margins is if we basically give something which improves the performance of the customer. Now that we are doing in partnership with Mitsubishi, as we were discussing one more discussion in earlier question that combination of a specific kind of electrolyte along with kind of a specialty kind of a separator can improve the performance of the batteries or the cells for the end user. So when we do that, we earn the right of getting higher EBITDA. Otherwise, again, it's a ROC-driven business, and I think if we do a 20% plus kind of a ROC for this kind of scale, I think that would be a very good outcome. EBITDA level, I think it will work out at around 16% or so.
Sure, sir. And sir, just want to ask you in terms of if you could provide a breakup in terms of end user industry, like for example, our whole basket, of course, battery chemicals is different. So, in terms of our whole end user industry, pharma, agrochem, engineering or something, how would that breakup be? And I was also you had shared this earlier, but I sort of missed it. You had mentioned about the bromine compounds, the AI, the CSM, and the organoid